Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, November 15th, the year 2017. What is there to think about? I don't know about you, but I get a lot of emails that are trading related. I mean, my inbox just gets filled with them. And the funny thing is they all talk about their systems or methods and why you should follow them, and the great percent returns, blah blah blah, right? But most of those systems require thinking. They involve you thinking and analyzing. And to me, that's really not the way to trade. I mean, I've said it before. You want to be a monkey. The light comes on, you press the lever, and you get your banana. And I laugh about it because, that's why there's trading robots. That's why people write EAs and other automated trading programs. Because you have a set of conditions, and then once those conditions are satisfied, you're supposed to enter the trade. But as humans, we have something called an ego. And that ego sometimes gets in the way and we outthink ourselves. Meaning, we don't take trades when we should, and then we take trades that don't quite fit our criteria, but we think we know better, and hindsight shows that we shouldn't have taken a trade. You hear people plan your trade your plan. Well, yeah, that's true. But bottom line is there really isn't anything to think about, especially if you use horizontal lines. Let's take a look here at the week, and we can see here from the weekly chart the dollar yen went down from the weekly open. There was a gap down, it filled the gap, and then came right back down and kept going. And we can see here it put in a new low, and it seems like it's bouncing back. In fact, if we take a look here, it's bounced back 44 pips off the bottom today. Here's the bottom. And so if you remember from earlier this week when I explained about higher highs and higher lows, etc., we had a lower low came in here, and then we had a higher low. So you see here, price pushed down, came back, pushed down again, but not as far, and came back and took off. So right here was a nice chance to make a profit. You can see here the same thing happened. A lower low, a higher low. Right there, there's a chance to make a profit. I mean, there's really nothing to think about. You've got a pattern. Did it fit the pattern? If the answer is yes, then you enter the trade. If the answer is no, then you wait. I mean, really, there's not anything to think about. And that's the whole point. What could be simpler, right? I mean, you see the pattern, you know the pattern, you execute based on the pattern. Now, if it was a true rat reversal trade, I believe that would have been your trigger, and you'd still be up 10 pips. So there's really nothing to think about. And you see people with a whole bunch of, I guess you call it annotations on their chart. All these different, supply and demand zones and support and resistance zones. Once again, concepts. It's all conceptual. As opposed to highs and lows, which those are lines pretty much, if it's previous day or beyond that, in that direction, they're set in stone. Those lines don't move. If it's the current, well, those lines are in sand because we can make new highs and lows. But the daily open, that line is in stone. And you can see right here, there's the daily open. It crossed once, crossed again, and there it went. So by trading in the direction of the cross, once again, nothing to think about. You see which way price is moving here, indicated by the red candle. It's moving down. We know the direction. We know where to enter. And it's that simple. It's not complicated. It's not rocket science. But some of those people that send those emails, they want you to believe it's rocket science. They want you to believe they have this formula that is the path to riches. And I have to laugh. Because, I went through that whole squiggly line indicator phase. I was there for a few years, but it didn't take me long to see through it, and I pretty much emptied, got rid of all those squiggly line indicators. Don't need them. But if you use them and you're profitable, all power to you. There's more than one way to trade. I just offer the way I trade. And some people seem to like it. There's a lot of people that I don't know, they like to take pot shots at me. But that's on them, not on me. So you can see here once again what happened. This is, today, markets open live. And you can see it here once again. Same idea. And then we can, once again, we look at the buy zone, and as I just explained, you see here, it only entered the short zone. That would have been the trade. Simple, to the point. You can learn this stuff in an hour or less. I mean, it's just not difficult. Price never got to the buy zone, got to the short zone. Here at the rat zone, once again, this is the area you want to enter. This is dynamic, it's live, and you can see here what happened. And then you can see here, once again, the ship sailed at 113.29. And finally, we've got the wick zone. You can see price popped out of the lower wick zone. Yesterday's lower, the wick of yesterday's D1 candle right there. And you see price came down through, and the rest is history. And if you notice, I pretty much stick with one pair, but we can switch over if we want to see another favorite trader mine is the euro yen. And on the weekly, you see here we had a breakout of the previous week's high. The gap filled. And we see here close to open minus 47 today. Once again, you can see what happened. It's not rocket science. And you can see here the percent change and the fib retracement number if you're in the fibs. And the daily high 5 pips above the open, daily low 68 pips below. Here you see we're getting ready for a setup. Didn't make a lower low, so we can let this candle close, maybe look for some upside. And once again, buy zone trade. As you can see, there was no long trigger, short trigger. Might have taken some heat here, but it paid off. And once again, the buy zone. No, it is the rat zone. And you see here, it triggered, took some heat, paid off, entered. Now, you have to remember this is dynamic rat zone, so you see it redrew it here. But at the time, it would have been right here. But the way this indicator, it plots it going backwards, as opposed to having it dynamically draw the dots. I think I have a version that does that. I like this one, just so people can see the whole day. And the wick zone, you can see here, entered the upper wick zone, exited slightly, came back through into the candle body. So once again, you can use any of the pairs. I like to pick the ones with the range. Now, the euro dollars had some interesting movement. You see here it broke out last week's high. It's above 118. But if we look through the charts, okay, 12 pips above the open, 24 off the low, 51 off the high. And you can see here, using the hour chart, once again, lower high, it broke the low. That could have been a trigger right there, or you could have waited and taken a trade there. So right there, it's making a lower low. And you can see here, taking shorts, probably would have stopped out. You could have taken the long and made it back and then some. Finally, the rat zone, you can see what happened there. So, fellow traders, I think that wraps it up for today. And I hope you basically trade what you see, plan your trade, trade your plan. And remember, it's not what you trade, it's how you trade it. The Rumpled One signing out.